Welcome to the deep dive. Today we're digging into Meiji Group. They've got this incredible history, over 100 years.
That's right. And since 2018, they've been putting out these integrated reports. Really useful for understanding their direction.
Exactly. They lay out how they're aiming for, well, sustainable growth and creating long-term value.
Uh-huh.
So our mission here is to unpack their latest one, the 2024 Integrated Report. It covers their fiscal year ending March 2024.
So, pretty recent data.
Yeah.
Decent growth, but the overseas story is maybe more interesting.
I think so too. Overseas sales jumped 10.2%, reaching JPY 132.3 billion.
Okay, so that's what, about 12% of their total sales now?
Exactly, 12%. And here's the kicker. They're aiming for 30% by 2030.
30%? Well, that's a serious target, a major shift.
It really is. Makes you wonder how they plan to get there.
Well, their 2026 medium-term business plan gives us the roadmap. They talk about these three transformations.
Okay, break those down for us.
So first is transforming focus markets. That's clearly tied to that big overseas push we just mentioned.
Makes sense. Number 2.
Second is transforming business structure. This is about weaving social issues, sustainability stuff, right into how they run the business, using them as drivers.
Interesting. And the third?
Third is transforming behavior. This focuses on their own framework, Meiji ROESG, and ultimately boosting their overall corporate value.
That 30% overseas goal, it feels like more than just a target. It feels like they're redefining themselves.
I think that's exactly it. They call it a corporate transformation, moving from being, very Japan-centric to having a much bigger global presence.
So where are they focusing overseas?
It varies. In the U.S., for example, their Meiji chocolate brand actually outsold a major local competitor last year. That's quite something.
Wow, really? How'd they manage that?
Good question. The report suggests they've really hit a sweet spot with U.S. consumers. Then in Asia, the focus is more on nutrition infant formula, enteral formula.
And Europe?
Europe, it's that cube-type infant formula, through their partnership with Danone. It's doing well, apparently. They've even upped their investment in the European subsidiary to make more of it.
Okay, so targeted strategies for different regions.
Yeah.
But scaling up globally like this, that must come with risks, right? Investment challenges.
Absolutely. The report is pretty open about that. There are definite challenges and risks with this kind of expansion.
Like what specifically?
Well, the big one is funding it. They stress how crucial it is for their domestic businesses in Japan to stay profitable and keep generating cash.
So the home base needs to power the expansion.
Precisely. Because, seeing big returns from new overseas markets, that takes time.
You mentioned that second transformation weaving in social issues. Can you give another example besides just sort of the general idea?
Sure. A good one is their Meiji nutritional profiling system, the Meiji NPS.
NPS.
Yeah. The idea is to be a leader in how they label food, providing really clear, easy-to-understand nutritional info, taps right into that consumer focus on health.
Okay, that makes sense for the food side. Anything similar on the pharma side?
Definitely. There is a big push for stable supply of essential medicines, particularly antibacterials. They're building a new bulk drug production line in Gifu.
In Japan?
Yes, to reduce reliance on overseas suppliers. It's even like some government backing tied to economic security. Think penicillin-based drugs, things like that.
So building resilience there too. Okay, let's dive deeper into the segment. Starting with food, what are the main strategies there?
Well, in the food segment, especially in China, a key focus is improving profitability in their dairy business.
How are they doing that?
They're streamlining their product lineup, SKU management, basically, and they've shifted more towards higher value B2B products.
Business to business.
Yeah. And interestingly, those B2B sales in China actually brought in more revenue than their direct-to-consumer sales last year.
That's a significant shift.
It is. Plus, they've got new plants up and running in Guangzhou and Shanghai this year, and plans for unique new products, like Hokkaido flavor yogurt for China.
So China dairy is about profitability and B2B. What else in food?
They want to take the success they've had with chocolate snacks in the U.S. and replicate that in China and other parts of Asia. Those new plants will help with capacity.
Makes sense. Leverage the infrastructure.
Exactly. And the nutrition business, infant formula, enteral nutrition, sports protein, like their Savas brand, that's another key growth engine.
Building on their R&D.
Right, using their tech and IP. That includes the Danone link in Europe, and they're expanding Savas in China too. They're even trying new things like an immunology testing service, using digital tech for health insights.
So food is about global expansion, fixing lower profit areas, and evolving marketing. Got it. Let's pivot to pharmaceuticals. What's the strategy there?
Okay, pharma. A core strength, as we touched on, is antibacterials. They have a big market share, and their role in stable supply really got highlighted during the pandemic.
And the government recognizes that.
Yes, there's a big government focus on shoring up the domestic supply chain, and some Meiji drugs are designated as essential, which helps with pricing pressures.
What about new developments? Vaccines.
Yes, they developed Kostive, that's their self-amplifying mRNA COVID-19 vaccine. That came out of an open innovation partnership with Arcturus Therapeutics.
Beyond COVID, where's their R&D focused?
They're concentrating on infectious diseases, obviously, but also hematology and immunology inflammation.
So a few key areas.
Right. They're doing joint research. They've set up an innovation hub in Boston to scout for opportunities.
Any specific drug candidates mentioned?
Yeah, a few. ME31A3, which is a PDE4 inhibitor for inflammatory diseases. OP0595, that's a new type of beta-lactamase inhibitor to fight resistant bacteria.
Yeah.
And KD2396, a 6-in-1 pediatric vaccine.
A combo vaccine, okay? And globally for vaccines.
They're rolling out flu vaccines in Asia. And they have a dengue fever vaccine candidate, KD382, that's got some government agency support. Plus, their smallpox vaccine got approved for Mpox prevention, too.
Sounds like a pretty active pipeline. How are they managing the global rollout on the pharma side?
They mention having experienced R&D and production teams, plus strong local staff, lets them move relatively quickly overseas. They even set up a U.S. subsidiary just for clinical development.
Okay, so both segments have these big international ambitions. But you mentioned earlier their previous plan, the 2023 one, didn't quite hit its marks.
That's right. They do acknowledge that. They didn't fully achieve what they set out to do in the 2023 medium-term plan.
But they see it as groundwork.
Exactly. They frame it as laying the foundation for the current regrowth phase. They also call out the challenge of reducing greenhouse gas emissions, especially Scope 3.
Ah, the supply chain emissions. Always tricky.
Very much so. Those indirect emissions are tough for any company to tackle.
Okay, so learning and adjusting. Let's turn to the financials in more detail now. You gave us the top-line sales figures. What about profit?
Right, so consolidated operating profit landed at JPY 84.3 billion. And as we noted, that was actually down 7.6% from the year before.
Down 7.6%, so the operating margin slipped a bit too.
It did, down to 7.6% from 8.3% the previous year, so about 0.7 points lower.
And what did they say were the main reasons for that drop?
The report breaks it down. A big factor was higher raw material costs, hitting both food and pharma.
Inflation's still biting, huh?
Seems like it. Then for pharma specifically, those NHI drug price revisions in Japan had a negative impact.
Government price setting.
Yep. And on the food side, they spent more on marketing. There were some other cost savings that helped offset things a bit, but those were the main drags.
What about the bottom line? Profit attributable to the owners.
That came in at JPY 50.6 billion, but it was impacted by a couple of things.
Huh?
Yeah, their share of losses from some equity method companies, businesses they partly own, and also an impairment loss they took related to the China business in the food segment.
Ah, okay, so some specific hits there. How about key financial health metrics?
R-
ROE,
Oh,
ROIC.
This is interesting. Despite the operating profit dip, return on equity, ROE, actually went up to 6.9%. That's a 0.7 point increase.
Up. How did that happen?
Well, ROE relates net income to shareholder equity. Other factors beyond operating profit influence it. And similarly, return on invested capital, ROIC, also nudged up slightly to 6.2%, a 0.4 point rise.
Okay, and the dividend?
Big jump in the payout ratio. It went to 52.3%. That's way up from 36.4% the year before.
Wow, over half their earnings paid out. And their balance sheet, still strong.
Very strong.
Yeah.
Equity ratio is sitting at 61.9%. That indicates a solid financial base.
Good to hear. What about cash flow?
Healthy. Operating cash flow is JPY 107.9 billion. And free cash flow, that's cash from operations minus capital spending, was JPY 83.3 billion.
So generating good cash. What did they spend on capital investments?
Capital expenditures, or CapEx, totaled JPY 53.4 billion, and that includes specific ESG-related investments, too.
And they mentioned selling some shares.
Yeah, they divested about JPY 14.0 billion worth of cross-shareholdings, those shares held in other companies.
Okay, that high dividend payout certainly signals a focus on shareholders. Let's talk more about their plans to create shareholder value.
Absolutely. The dividend is a key piece. They made a point of highlighting this is the 10th year in a row they've increased the annual dividend.
10 years straight, that's consistent.
And it meant they actually surpassed their target payout ratio of 40% from the previous plan, hitting 52.3%, as we said.
What about share buybacks? Are those part of the plan?
The report doesn't explicitly commit to future buybacks. However, it does mention that through talking with shareholders, the topic of, and I quote, issuing stable and continuous shareholder returns, conducting opportunistic share buyback, came up as a major issue.
So it's definitely on the table, even if not formally announced.
Seems that way. It's something they're clearly aware investors are interested in.
Okay, so growing dividends consistently, buybacks potentially. What else are they doing to boost value?
A big shift is their increased focus on ROIC, return on invested capital, but broken down by business segment.
Ah, looking at returns for each part of the business.
Exactly. They're using it much more actively now to monitor performance, weigh up the business portfolio, and guide investment decisions.
Do they have targets for ROIC?
They do. Company-wide, they're aiming for 9% or more by FY 2026. The food segment specifically has a hurdle rate of 6%.
Okay, quantifiable targets. Anything else?
They've also laid out 4 specific indicators they'll use to track overall corporate value enhancement.
Oh,
Market capitalization, brand value, employee engagement, and investment in intangible assets like R&D. They say they'll monitor these closely.
a broader view of value then.
Right. And finally, they're continuing to unwind those cross-shareholdings we mentioned. The plan is to get the total amount below 5% of their consolidated net assets during this current medium-term plan, so by FY 2026.
Selling off those non-core holdings. Okay, seems like a pretty comprehensive approach. So pulling it all together, how do you assess Meiji Group's prospects moving forward based on this report?
Well, the 2026 medium-term plan is certainly ambitious. That big overseas push integrating the social responsibility piece more deeply, it's a lot.
What are the projections for this current year, FY 2024?
They're forecasting consolidated net sales around JPY 1159 billion and overseas sales reaching JPY 154 billion.
So that overseas ratio would tick up again.
Yeah, to about 13.3%. But a really critical factor, as we discussed, will be improving profitability back home in Japan to actually fund that growth sustainably.
That balance again.
Exactly. They need both top-line growth, especially overseas, and better profitability, higher margins, better returns on capital like ROE and ROIC.
And the sustainability angle seems baked in now.
It really does. The Meiji ROESG framework, their recognition as an SX brand for sustainability transformation, it feels like it's becoming part of their core identity, not just an add-on.
So the big picture is a company undergoing a major transformation.
I think that's the key takeaway. They're actively trying to become more global, more socially conscious, while still keeping a laser focus on delivering sustainable value for their shareholders. It's a significant undertaking.
So for you listening, what we're seeing is Meiji Group making some bold moves. They're betting big on international markets, trying to genuinely embed sustainability into their strategy.
Yeah, it's this whole story of balancing that ambition, the growth, the global reach, with the hard realities of needing solid profits, especially domestically, and keeping shareholders happy with returns.
Which brings us to a final thought, perhaps.
Right. How effectively can a company with such deep roots, over a century of history in Japan, truly pull off this global pivot? Especially while juggling these complex sustainability goals and the constant pressure for investor returns in today's world.
It's a fascinating balancing act to watch, isn't it?
It really is. A lot of moving parts.
Definitely food for thought. Thank you for taking this deep dive into the Meiji Group's 2024 integrated report with us.
My pleasure.
If you want to dig even deeper or follow their progress, you can find much more detail on the Meiji Holdings website. We hope you'll join us next time for another exploration on the deep dive.